Today, the US dollar index is strengthening across the board, pushing down its rivals. This was predictable, but some market participants were not ready for this. As for the important news releases, Australia unveiled a disappointing employment report. The surge in the number of unemployed people is likely to have a negative impact on the Australian dollar. Meanwhile, the yen, on the contrary, may rise amid positive macroeconomic data published today. The results were better than the forecast values. On the chart, we can see that in the Asian session, the US dollar index has grown significantly to 90.10. This rise was in line with our forecasts. What triggered its growth? Well, it seems that high expectations of a reduction in the bond buying program. This was the main reason for a rise in the US dollar against the euro and the pound sterling. Some Fed officials admitted that soon there might be a talk of a gradual reduction in the bond purchase program, specifying that the economy is still far from its targets. However, this was enough to support the US dollar, which advanced against a number of riskier assets, sending them lower. In the short term, we expect a slight decline after yesterday's sharp jump, presumably to 90.00 from 90.10. This is the nearest target of the US dollar index. At the same time, the dollar-yen pair rose by 33 points yesterday amid the strengthening of the US dollar. However, the pair's rally is limited by the decline in the stock market. Yesterday, the S&P 500 index was down by 0.29%. However, the fall in the stock indexes, which began on May 10, is uneven. So far, some traders even doubt a major correction that has been anticipated for a long time. For this reason, the US dollar asserted strength against the yen. In case of a more sharp decline in the stock market, the yen will sink considerably. During the Asian session, the pair reached the level of 109.15, and it's likely to stay in the range of 108.35 to 109.97 due to the uncertainty in the US stock market. Yet, even the breakout of the quote to the upper limit of 110 does not mean anything. Besides, it's unlikely to trigger the yen's downward movement. In addition, the Japanese currency was supported by upbeat macroeconomic data released today. In particular, the report showed a big increase in imports, exports, and the trade surplus. All these values for April were higher than expected. Yesterday, the Australian dollar dipped to the closing level of May 12 when it nosedived by 112 points on the back of falling commodity prices. The Aussie has completed the correction from that drop and is poised for further decline. The quote broke the intermediate level of 0.7735. The second intermediate level is 0.7690 and the first target level of 0.7641 is located below it. The Aussie weakened after the release of negative employment data. And we continue to monitor the situation and share with you the most up-to-date reviews of various financial instruments. See you!